Alrighty, guys. So I just put on a new trade, and as promised, I'm giving you this information in real time. So I've only just put on this trade 5 minutes ago. This is still fresh. So for anyone who's watching right now, you've probably got a good couple of hours if you want to execute this trade with me. So the trade that I've put on was found by my optimizer to be this trade. So I'm trying to create this position, and this is just going to be a starting position. This will not be all of it. This is just an initial. I want to have something started so that you can see in this range, 4,000 to 5,000, the price has reacted quite well off of these levels. This range has been respected quite a lot. So a lot of money has been made in this range within the last 12 days. So had you invested $770 in a grid bot with these specifications, you'd have made $233, which is pretty good. But that's also because volatility has been very, very high. So I wouldn't have necessarily started this all the way back there because I also need to hedge with options, and these options have been very expensive up until now. The price of these options are starting to come down a bit. And I also like the look of these. These dotted lines are my liquidation prices. So because this grid uses futures, there is liquidation involved. So, but there's quite a bit of runway. So you see we've got this grid where we're making all this profit, all this money, and then we can afford to leave the grid quite significantly to the upside and the downside, and then sort of stay put and do nothing and just wait for the price to come back in. And furthermore, we can hedge with puts and calls of equal size, and it will cost us this amount of dollars to do that. These are the current put and call prices as of the running of this report, which is 30 minutes ago. These prices may have changed by the time that you may want to execute this trade, but they both would have changed. So if the price has gone up, which in my case it went up by a few dollars when I actually ran this, when I actually executed this, yeah, the call price got a bit more expensive, but then the put price got a bit cheaper, so that it kind of makes up for it. So this is what I'm executing right now. I'm starting this grid bot with these specifications. You can see all the specifications here, like the upper edge, lower edge, how many grids, the leverage amount, the grid investment, and then I've also bought 0.8 puts for 4,100 and 0.8 calls for 5,000, and these are for the October 31st expiry. So we're always looking about 2 to 3 months ahead with these strategies, and this is a 2-month strategy. So we've got about 65 days until these options expire. And no, actually it's 63 days. You can see it up here. And this is not gonna be the end of this trade. Like, I'm not just gonna buy these options and enter this grid bot and that's it. It's not like that. Although by the projected profit that I'm seeing up here, if we were to run this and if we were to sit in this range for the remaining 63 days, and then the options expire worthless, then we've made a profit of $1,140, and we've only paid $530 for the options. So we've made $500 of profit. If this picture were to remain, if the price were to just keep in this range for the remainder of the 63 days, we'd actually be pretty happy with that. But that's not typically what happens. So I only started this trade now so that I've got something running, so that I'm collecting some premium from this range, from this volatility. But what I'm going to be looking to do actually is, as soon as price goes a little bit high, or I'm going to be buying more puts, or as soon as it goes a little bit long, I'm going to be buying more calls. So I'm actually looking to create a massive up curve to the upside, or a massive up curve to the downside. But I'm not going to do it at these prices. I'm actually looking at the volatility right now, and it's starting to come down. I feel like, and this is my alpha, this is my personal bet that I'm taking, is that volatility is actually about to come down even more. So then what I'm actually looking to do is create this position in a way that we actually make more money when the price leaves the range on either side. But for that, I'm looking to get a better price for these options before I do that. For now, I'm just betting that the price will likely continue in this range for another week or two. Obviously, if the price leaves the range right now violently, this is the risk that we're exposed to. It's like we we could be down by $312 on this, which is about just a little under 25%, but it's a risk I'm gonna be willing to take because it's not a lot of money and because I don't want to be on the sidelines when all this good stuff is happening. And of course, there is an element of risk involved, but hey, what are you going to do? You snooze, you lose. You got to take some shots, you know? But no, I feel like this is a good shot. This is a well calculated shot. I'm in a good headspace right now. I'm not too risky, but I'm not too timid either. So I feel like I'm feeling good about this trade. I'm feeling like I'm going to watch this for another couple of days. I'm going to decide, do I want to get more options at cheaper prices? I feel like the prices of these options will come down, and when they do, I'm going to be buying more, potentially on both sides. And then I'm going to use the position analyzer soon to compute the current performance of this position as I do. And let me just show you one last thing on Bybit because it's important. If you're going to start this trade, these numbers are applicable for Binance. So I was originally running this grid bot on Binance, and the way they compute their leverage numbers are different from Bybit. So this leverage of 10 for this grid investment will actually give you more quantity per trade on Bybit, way more on Bybit than on Binance, which means your liquidations will be closer than you expect, and we don't get this nice sort of safety band, safety margin. So on Bybit, the actual numbers you have to put in to get this trading bot with this specification are going to be a little bit different. So let me show you what numbers I've got on Bybit if you wanted to run this on Bybit, which is where I do run it. So if I go on details, so I've actually had to use slightly more money, so it's 800 rather than 770. And then the leverage that I've used is, where is it? It should say, it was either 5 or it was 5. I used 5, so I used half of what this says to use. And that's because Bybit tried to be a bit smart with their leverage. They won't place all the orders to the upside or the downside. They'll just place one side of the orders or the other, depending on what the price is doing, which means you've got twice more capital available. Whereas, so on Binance, you would have immediately placed all of the orders. Bybit only places half, or either the upside or the downside, depending on where the price is relative to your entry price. And for that reason, you always have to cut the leverage down in half on Bybit. What is important is if you do this, make sure that the quantity per order that you have is what it says in this report, because that's what's going to give you those numbers that we've calculated. So this historical grid profit, this projected grid profit, these are all going to be corresponding to a quantity per trade of 0.06 ETH. So that's what you need to look at. So if you select a certain leverage and you see that this is different, you terminate the bot, recreate it with higher or lower leverage until it gets 0.06. And then the options I just bought at whatever price they were, but you can try to wait for the prices to come down a bit, but that's up to you. Anyway, thanks for watching, guys. I will keep you posted regarding the performance of this grid bot. And yeah, I'm excited to see what happens. And thanks for doing this with me, and I'll see you guys in the next one.